Forex market situation update. Ladies and gentlemen, welcome back. Tuesday morning today. I'm really excited to present to you the dollar Canadian. Just literally a few minutes ago, we decided that it's time to take action. We've been, we got in, we established a short position. Let's just start here, right? Now, we've been bearish on the dollar Canadian for quite some time, but I guess the timing was off. Last time we've been here, last time we pulled the trigger was when the price action got this reaction from 27.20. So when it was going up to 27.20, we thought that was going to be the end of the road, and the price was going to basically resume the downside trend and conquer new lows. However, a few days later, about a week later, price began to break up, and we got out. We killed that position on the spot. Now we think it's coming back again. We think we were off with the timing, but not off with the conviction, not off with the direction, with the move. And price action basically just overstretched itself on the way up. But I want to show you something really fascinating, technically speaking, of course. I want you to look at this, purple dotted line, right? And I'm going to show you why this is a solid, bearish conviction that we have here. Because when price action was going up, obviously this purple dotted line, as you can see, broke the positive momentum. Now this line is not just a random line that I decided to cross here. It's actually 76.4%, right? Fibonacci last level of defense if you measure the whole downside move from top to bottom, which means by definition it's still inside the range of a typical correction. So it's not an independent upside trend. It's a corrective move that was correcting the previous downside segment, which is part of the downside trend. See what I'm trying to say here? Now let me show you the weekly chart. It's very impressive. It's even more impressive here, because here you can see the price action was basically pulling back all the way to 2803, right? 2803. So we got two resistance levels here, and both of them are basically pushing price action on the flip side, on the opposite direction. We think this is just the beginning. This is just the beginning. So we decided to pull the trigger, got in with 10K just to warm up, right? Just to warm it up a little bit. If price action will continue to drop, as we suspect it will, we're going to start to build up a decent sized position. That's the game plan. Now, as far as targets goes, right, we have two. Basically, we're going to break that move into two different campaigns. So the first campaign would be dedicated to the next big support level, 26.24, and you can see my target, my profit target is already there, right? And then once we get there, if we get there, of course, that's where we're going to terminate that campaign, and we're going to restart that campaign once price action begins to break that 26.24, and then we'll take another punch on the dollar Canadian, trying to reach 24. Guys, 24 is where the previous low is, right? But more than that, if you measure the whole move, the whole correction move, right, from the bottom to the top, and apply a projection 123.6%, you'll find it right here. And I suspect this is the next big support level that's going to be able to block that negative momentum that's coming, as we estimated, right? Now, stop loss level, we've placed it at 29.10, around 29.10, a little bit above yesterday's highest high. And only if price action by the end of the day pulls back up above 2803, that's going to be a warning sign for us that will probably force us to step out, right, to close the position. Alright guys, that's about that dollar Canadian. I'm going to be back with the next video. See you soon.